Assalamualaikum and very good morning to Madam and my fellow friends. Today we would like to present our financial management assignment. So I will start with a business nature. The objective of assignment assigned was to study the financial health of company and conducting a comparative analysis. We decided to choose Seng Industries Berhad as our company and Huatai Industries Berhad as our competitor in the biscuit industry. This report created to analyze and evaluate the statement of financial position and income statement of both companies by computing the performance indicators such as liquidity ratio, activity ratio, leverage ratio, profitability ratio, and market ratio for 3 years. Those financial analysis tools are important to measure the strength and weakness of both company performance. Liquidity ratio is how liquid the firm to meet short-term obligation. Activity ratio to measure efficiency of assets to generate sales. Leverage ratio, how firm finance its assets to determine the capital structure. Profitability ratio, measure the efficiency of firm to generate profit. And the last one is market ratio, measure the return on investment for shareholder. The analysis result for 3 years show both company conditions, good or bad, were affected by internal factors such as operational efficiency and external factors such as economic growth. More than that, we are interested to know which company has a better performance and how their financial condition after 3 years. And we move to analysis overview for Seng Industry. Seng Industry Berhad mission to produce quality fast-moving consumer products, and their vision is to be market leader in fast-moving consumer products. And for Huatai Industry Berhad, Huatai Industry Berhad is one of the pioneer and longest established biscuit manufacturer in Malaysia. I will pass it to.
So hi, I will replace Helwa on how to describe the ratio. For current ratio, Seng recorded the best result, where since 2017, Seng rise could defer to Huatai until 2019. Looking for the quick ratio. Also, our company Seng performed good and quite perfect than Huatai. For example is year 2018, where Seng stayed 2.07 while Huatai below 1. For the third ratio, net working capital. We already know from the calculation that Seng rise high or held net working capital in a positive sign. Look forward inventory turnover. Huatai got quite good, maintain the performance, but cannot fight with Seng, where Seng recorded 7.50 at 2017 and increased at 7.78 and rise towards 8.414 for 2019. While average collection period, we know the highest result give the negative effect. We can see from the bar chart that Huatai got the bad result with 2017 at 77.28, deferred to Seng where 78.26. That's all from me, and I pass it to the Anis.
Thank you, Ms. Salima. So let's proceed with mine. So based on the bar chart, account receivable turnover for Seng is higher than Huatai. Seng is decreased by 0.3 in 2019, and Huatai company also suffered the same thing by 2.6 in 2019. Then for fixed asset turnover, so as we can see here, both of Huatai and Seng company show an increment 3 years in a row. Next, total asset turnover, Seng company slightly increased from 2017 to 2019, and for Huatai company, it increased very drastic in 2018 and decreased the same way in 2019. Next, for debt ratio, Seng company increased from 0.32 at 2017 to 0.35 in 2019. Huatai company decreased from 0.57 in 2018 to 0.35 in 2019. And the last one, we proceed with the debt to equity. This will compare a company total liabilities to its shareholder equity and can be used to evaluate how much leverage a company is used. Seng company just show a slight increased debt to equity of Huatai is higher than Seng, but it show increment from 2018 to 2019. Thank you. That's for me. Let's move on to Aina.
Thank you, Anis. Next, looking for gross profit margin. Our company Hubseng recorded the highest profit while Huatai has the lower gross profit margin. This means that Hubseng is more efficient in generate their gross profit from its sale since they have the higher contribute margin. For net profit margin, we can see Hubseng show the high net profit margin more effectively control its cost of provide goods at a price significantly higher than its cost. So we may infer Hubseng indicate that the business in pricing its product correctly and it exercising good cost control. While the return on asset ratio is a profitability ratio that measures the net income produced by total asset during a period by comparing net income to the average total asset. We can see Hubseng more efficient than Watai because the higher return on asset the better. Hubseng can manage its asset to produce profit during a period and it's earning more money on less investment. The last ratio is the return on equity ratio. The return on equity ratio formula is calculated by dividing net income by shareholder equity. We can see from the bar chart that Huatai lower than Hubseng. This means that management Hubseng is more favorable to investor than Huatai because investors are more likely to get a high return on investment and using equity financing to fund operation and grow the company. I will pass to the Yusmi Atila.
In conclusion, we can see that both industry, Hubseng and Huatai industry, are doing very well in the business and have a bright future ahead in the consumer product. In the analysis, we have found that Hubseng has performed better than Huatai industry in average for the past 3 financial years. There are several factors that lead to the result. First is the sale volume generated by Hubseng is much bigger than Huatai. Second, Hubseng also owns a bigger value of current asset in the same time its current liability is low, which Huatai even worse when current liability is more than current asset. In order to improve, Huatai might need to lower down in its operational costs, which will lead to reducing current liability. Other than that, Huatai need to market its product aggressively in order to beat sales figure made by Hubseng. Sales volume will play the most important role to turn Huatai as more competitive company and standing as high as Hubseng. Finally, as well known, biscuit industry in Malaysia is not small. We have many big players like Julie's, Machi, Donen, and hundreds of local small medium enterprise producers. Company like Huatai must get ready to be more competitive and benchmark their performance against big players like Hubseng. That's all from us. Thank you.